Hi there, welcome back to the channel. In today's video, we'll be going over a sample portfolio that you could use if you're looking to build a Sharia compliant, globally diversified, passive, low cost, tax efficient ETF portfolio. The portfolio will include 3 ETFs. The equity ETFs only include companies that are in line with the Sharia compliance criteria, which means that they avoid companies that deal with weapons, alcohol, financials, adult entertainment, and gambling, to name a few. Also, bonds aren't included in this portfolio due to the presence of interest on money that has been loaned. Hence, a gold ETF could be used to diversify the portfolio. You could opt for Sukuk, which is the Sharia-compliant equivalent of bonds, if they're available to you through another investment service, but currently there are no island-domiciled Sukuk ETFs that I have come across. Here is a table with sample portfolio weights. The weights you choose for your portfolio could differ based on how risk-averse or risk-seeking you are as an investor. This is completely subjective, and the table is just a guideline. Actually choosing the weights is completely at your discretion. Let's quickly go over ETF fact sheets. There are links in the description below to each ETF for your reference. The first fact sheet that we have is the ISWD ETF provided by BlackRock. This is the iShares MSCI World Islamic ETF. Under key benefits, we could see that this ETF provides direct investment in developed world companies that comply with Sharia investment principles. Let's go through the key facts about the ETF. The base currency of the ETF is USD, which is the US dollar. The total expense ratio for this particular ETF is 0.6%, which implies that for every $10,000 invested in this ETF, you pay $60 on an annual basis. The next portion to focus on in the key facts is the domicile. This is probably the most important factor to look at when you're looking at investing in ETFs, especially if you're a non-American. Having an Ireland domicile is extremely beneficial to any non-Americans investing in these ETFs. The reason for this is that dividends are taxed at a lower rate. Also, there are no estate taxes. If you are a non-American and you are not sure as to what estate taxes are, I have another video up, and it's extremely important for you to understand what estate taxes are before you start investing in ETFs. The next point you could look at is the number of holdings this particular ETF is invested into. As we can see, the ETF currently holds 419 companies. The top holdings include Johnson & Johnson, Nestle, Procter & Gamble, Roche Holding, Adobe, Pfizer, Intel Corporation, Merck & Co., Novartis, and ExxonMobil. The ISWD ETF is a fantastic way to get exposure to developed markets. The next ETF that we'll be looking into is the ISDE. This ETF is also provided by BlackRock. It is the iShares MSCI Emerging Market Islamic ETF. Looking at the key benefits of this ETF, it provides direct investment in emerging market companies that comply with Sharia investment principles. As we look at the key facts about the ETF, we can see that the base currency here is also USD. The total expense ratio is a bit higher at 0.85%. Which implies for every $10,000 invested in this ETF, you have to pay $85 on an annual basis. This ETF also has a distributing structure, which implies that dividends received by the ETF are paid out to the ETF holders. Total number of holdings in this particular ETF comes to 326, with the top holdings being Alibaba, Taiwan Semiconductor Manufacturing, Samsung Electronics, Reliance Industries, JD.com. When we look at the geographic breakdown of this particular ETF, we can see that it has the highest weighting in China, followed by South Korea, Taiwan, India, Saudi Arabia. The third ETF that we'll be looking into for this portfolio is SGLN, also provided by BlackRock. This is the iShares Physical Gold ETC. In this particular case, ETC stands for Exchange Traded Commodity. Let's go through the key benefits of this particular ETC. 1, it has a targeted exposure to the gold spot price. 2, it is a direct investment into gold. 3, it has single commodity exposure. Let's look at some of the key facts for this particular ETC. The base currency here is also USD. The total expense ratio is lower at 0.15%. The domicile here is in Ireland. However, there is no dividend that is paid out in this particular ETC, as gold does not produce any dividends or any income, hence nothing is paid out. As mentioned before, the sample portfolio weights that I had provided in the table before could serve as a guideline. However, the weights that you choose for your portfolio can vary based on how risk-averse or risk-seeking you are as an investor. Choosing the weights is completely at your discretion. I would highly advise you to do your due diligence. If you thought this video was informative and helpful, do hit like, hit subscribe, that really helps out the channel, and thank you for watching.